PepsiCo, stock ticker PEP, just released their latest quarter's earnings report, and we can see they're currently up around 1.17% on the day. Now, if we look at this earnings report, we can see they saw a beat on earnings. Q3 non-GAAP earnings per share of $2.31 was a beat by around 2 cents, but revenue was a miss. It was down around 0.6% year over year, which was a miss by about $460 million. Now, we also have some other news coming from this earnings report. If we come down here, we can now see they're projecting a low single-digit increase in organic revenue. And along with this, they're projecting at least 8% increase in core constant currency earnings per share. Now, over the past couple of years, PepsiCo has traded relatively flat with a little volatility jumping up and down, but we can see in the past year, they're up around 4.86%, so they've definitely underperformed the market. And if we look at the past 5 years, we can see they're up around 22.31%, again, way underperforming the market. And if we look at just the past couple of years, it looks like they, for the most part, traded in a range of around 165 to 175. And if we currently look at their 52-week range, it looks like they're right in the middle. Now, despite this, there's a lot of investors who actually love Pepsi stock. Well, that's because PepsiCo is considered a very defensive and durable business. Let me show you what I mean. First off, if we go ahead and jump over to my dividend breakdown spreadsheet, and like always, if you'd like to be able to download any of my spreadsheets and also get access to the ticker data add-on in Google Sheets that allows you to automatically import stock financials straight into your spreadsheet, then you can head over to tickerdata.com at the link in the description. But if you come up here and plug in stock ticker PEP and hit enter, we'll start to notice some factors that makes Pepsi pretty attractive for defensive investors. And to start off, they actually have a pretty decent starting dividend yield. It's sitting at about 3.2%. But it's the history of dividend growth and dividend payments along with that that makes it even more attractive. We can see over the past decade, every single year, they've been reliably and predictably growing those dividends at a pretty healthy rate. They have a 10-year dividend CAGR of close to 8% and a 5-year at about 7.4%. So a pretty solid combination of dividend growth along with dividend yield. And keep in mind, this is a pretty mature company, so that's pretty solid dividend growth for a company that's a dividend king. And remember, dividend king stocks are companies that have increased dividend payments for 50 consecutive years. So a very long history of increasing those dividend payouts. And then if we come over here and look at the free cash flow versus dividends, what we can see is free cash flow has been covering those dividends over the past decade as well. Now, we do have one exception here in 2022 when dividends was greater than free cash flow, which is not a good sign, not something you want to see. And something else we want to watch out for is that free cash flow payout ratio has been climbing over the past decade. And as of the end of 2023, it was sitting at about 84.33%. Now, if we go ahead and jump over to my stock screener tab, we'll come up here and plug in PEP for Pepsi. First off, what we'll see is revenue per share was stagnant from around 2013 to 2018, but then we started to see some growth over the past few years. And we can see earnings per share has been growing over the past 4 or 5 years as well, along with free cash flow per share. We can see the company has been buying back some shares, but it hasn't necessarily been a huge priority for them. Debt to assets appears to be in a decent range, and return on invested capital is actually quite a bit healthier than I expected it to be over the past 4 years. We're talking about 17 or 18% over the last couple of years, which is pretty solid. And again, this is measuring how profitable are the projects the company is investing their money into. So 17 and 18% return, that's pretty good. And if we jump over to my profitability spreadsheet, one of the things we'll see is their gross profit ratio is actually quite a bit higher than you would expect for a company like Pepsi. The 10-year average gross profit ratio is sitting at about 54.3, while in 2023, it was sitting at 54.48%. So not a lot of change over the past decade, which is a pretty good sign for a very mature company. You have to remember, when these more mature companies start to see slower revenue growth like PepsiCo is seeing, one of the best ways they can continue to increase their earnings is to have phenomenal pricing power. And with gross profit margins of around 54%, I'd argue that Pepsi probably does have that. Now, we often see PepsiCo compared to Coca-Cola, and for obvious reasons, they're probably the largest competitors for each other. But there are some key differences Pepsi has that makes it a little bit different than Coca-Cola that you have to understand if you're interested in this stock. If we jump over to their annual report, one of the things we'll see is if we look at their mix of net revenue, they actually make most of their revenue from food, about 59%, while beverages is sitting at about 41%. Now, that is radically different than Coca-Cola. If we look at some of these top brands from PepsiCo, we can see a lot of the really famous ones are food companies, and you may not have even known they're actually owned by Pepsi. We have companies like Cheetos, Doritos, Captain Crunch, Fritos, and Lay's. And this is one of the things that makes Pepsi quite a bit different from Coca-Cola in that sense. And many would probably argue that's actually an advantage for Pepsi. Now, with all this being said, PepsiCo, again, over the past couple of years has been trading pretty much in the same range. Do I expect that to change in the future? What is this company actually worth, and what type of investor should actually consider buying into PepsiCo? Well, I want to answer all of that, but Let's start off with the valuation. Is Pepsi trading at about $169 per share a good price to consider buying the company? Well, to answer that, let's go ahead and jump over to my stock valuation spreadsheet and go ahead and come up here and plug in PEP. Now, the first thing I have to point out is one of the reasons that investors absolutely love Pepsi. If we come down here, we can see the beta is sitting at just 0.54. Now, what does this mean? Well, beta is a measure of the volatility of a stock, and it measures it in comparison to the S&P 500. Now, the S&P 500 has a beta of 1, so a beta of 0.54 means you are much less volatile than the S&P 500. If the S&P 500 were to drop by about 10%, this means Pepsi would probably drop by closer to around 5%. Now, the opposite of that is also true. If the S&P 500 grew by about 10%, maybe Pepsi would grow by around 5%. Now, that's not a perfect example, but it kind of gives you an idea of why some people who want to avoid risk, who are defensive investors, really like this stock. They love low volatility and predictable dividends and the durable business model. Now, the first valuation we're going to look at for PepsiCo is going to be our discounted cash flow analysis. So if we go ahead and zoom in here, there's a couple things we need to point out. Yes, the growth rate projection for the future free cash flow for this company is relatively low, and like we've seen, organic revenue is expected to just be in mid-single digits for this company or even low single digits. So I'm going with a growth rate of about 5% for the future free cash flows for this company. I then find the present value of those future free cash flows and add them together, add the company's cash and cash equivalents, and subtract out their total debt to get their equity value. I divide by shares outstanding, and we come to a DCF price per share of just $99.62, which is actually quite a bit below that current trading price. But let's keep moving forward and looking at the multiples valuation. Now, what we're doing here is we're looking at how the market is valuing companies that are similar in structure, and probably the best comparables are going to be Coca-Cola and Monster Beverage Corporation. And what we'll notice is the market actually values these companies at a bit of a premium. Look at the price to earnings multiple. We have 27.8 for Coca-Cola and Monster Beverage 31.67. So the average between these two is sitting at about 29.77. So if we apply that same average price to earnings to Pepsi and their earnings per share, we come to an intrinsic value of about $196.24. Now, the last valuation we'll look at is going to be our dividend discount model. And this values a company based on how much they pay out in dividends and how much that dividend is growing over time. And we can see the past few dividend hikes have been pretty good for this company. We have about 9.3 and 9.6% dividend growth, so pretty solid. Now, moving forward, I'm projecting a dividend growth rate of about 4.75% and a discount rate of 8%. Now, this is a little bit lower than we've seen over the past few years. Why is this? When we looked at the dividend breakdown sheet, we can see that free cash flow payout ratio was growing over time, and we really don't want to see it go much higher. So because of this, management team is likely to lower the dividend growth slightly over the next few years unless they can grow free cash flow at a healthier rate. And that's why I believe we'll see lower dividend growth. But even then, we come to a dividend discount model price per share of close to $175. So when we jump over to the output tab and we see our three valuations and average them together, we come to an intrinsic value of close to around $157 per share. So with a 10% margin of safety, it looks like our acceptable buy price would be around $141.17. So not quite in our buy range right now. Now, despite this, I still think there are investors who would be interested in PepsiCo at this price, but I'm definitely not one of them. We have to understand, I have a long-term time horizon. I'm looking to build a portfolio of dividend stocks that will continue to grow their dividends at a high rate so that I can one day live off dividends. So I'm looking for dividend growth rates of above 4.75% for most of my stocks. But with that being said, I think the Pepsi dividend is actually pretty safe and pretty durable, and so is their business model. Even with a higher than normal free cash flow payout ratio, this company's been around for a long time, and they've been increasing their dividend payments for over 50 consecutive years. One of the things we can also see is if we go back over to the earnings report and scroll down, we can see they've been buying back shares. It looks like they had about $1 billion of share repurchases as of late. That would probably go before the dividend goes. So when you combine the fact the company has a strong brand, a durable business model, and predictable dividends with pretty solid starting dividend yield and decent dividend growth, defensive investors absolutely love this stock. They love the low volatility. So while at first glance, being up only 4.56% over the past year seems pretty bad, and make no doubt about it, it definitely underperformed the market, there's not a whole lot of volatility in this chart, and if we look at the 5-year chart, the same remains true. So when you look at the stock price and you ask yourself, why is this company trading at a premium? Well, this is a premium stock because investors absolutely love predictability. They don't like it when earnings could either be way down or way up in the following quarter. They want to know what to expect. They want to know what to expect from a free cash flow basis because their dividends are going to be paid out of their free cash flow. And PepsiCo definitely provides that predictability and that stability. So if you're someone looking for those things, this could still be a good option at this price. But if you're someone more like me with a long time horizon looking for solid dividend growth and price appreciation, there's probably better options on the market, at least when you consider PepsiCo at these prices. Now, complete transparency like always, I do actually own Coca-Cola, so you're probably wondering, why do I own this stock when I wouldn't own PepsiCo? Well, keep in mind, I'd buy pretty much any company at the right valuation, and I'm currently up over 50% on my Coca-Cola position. So really, my initiation into Coca-Cola was more about the valuation of the company at the time I bought, and I've definitely reaped the benefits of about 50%. If PepsiCo was at a really good valuation, I'd start to consider it, but I just don't think that appears to be the case at current prices. So go ahead and let me know what you think of PepsiCo in the comments down below if you plan on buying or selling, and like always, if you'd like to be able to download any of my spreadsheets and also get access to the Ticker Data add-on in Google Sheets that allows you to automatically import stock financials straight into your spreadsheet, then you can head over to tickerdata.com at the link in the description. So with all that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.